Oliver, a company partly owned by Rupert Murdoch wants to buy Rupert Murdoch out of two other companies. Explain this.
So this is BSkyB in the UK, which is 39% owned by 21st Century Fox, which is Murdoch's US entertainment company. So BSkyB now wants to buy 21st Century Fox out of two other European companies, Sky Deutschland, of which Fox owns 55%, and Sky Italia, of which Fox owns 100%.
So the question that is on everyone's mind is how this fits into Rupert Murdoch's plan to control all television in Europe.
Well, what this would do will consolidate Fox's and Murdoch's European TV operations into one company, into BSkyB, which is based in the UK, of which Murdoch owns, I say, 39%. Now, whether Murdoch would then want to go and buy more of BSkyB is open to question. He tried to do that a few years ago. It got tangled up in politics and the phone hacking saga. So that part of the deal would be very difficult. But perhaps this is a preliminary part in which he'd basically wrap up all of the European TV operations into one company, which will be BSkyB.
Now, setting aside the imperial ambitions of Murdoch, is there an industrial logic to just this deal if the deal goes no further than what was proposed today?
Well, that's harder to see. What you have to think what you get by combining these three pay TV companies. Well, perhaps you get some cost savings, you get some cooperation and buying power in terms of hardware, you get some sharing of know-how, particularly the UK version of SkyB. SkyB has been very successful at selling an awful lot of products to its customers and expanding its customer bases. Maybe it could take some of that know-how out to Germany and to Italy. You might also get some synergies in terms of creating content that you can sell to across Europe if there's something that appeals to everybody.
That all sounds rather chancy and contingent. Let me ask you this. If you're a BSkyB shareholder, you've done pretty well here, and the two continental companies have not done as well. And if this consolidation happens, there'll be a lot of added new debt. Is this not a frightening development for the shareholders of BSkyB who've been so happy up until this point?
It's certainly a big change in the investment case for BSkyB. You did have a very focused UK offering, which was expanding very nicely, and then you'll add on a German business, which is just profitable and is growing very nicely, and an Italian business which has been stagnant for the last 5 years or so and looks much more mature. And as you say, you'd add on a lot more debt. So the investment case would change quite radically. But maybe BSkyB is coming to the conclusion that things have to change. Maybe it sees it's running out of growth in the UK. Maybe it sees challenges coming in from either cable companies who are growing, maybe Liberty it sees as a challenger, and generally the European media market, which is sort of consolidating around a few bigger groups. Maybe it thinks it has to bulk up in the face of that.
So a lot of maybes there, Oliver. We'll keep watching the story.